Hey guys, in this video, I'm going to share with you some tips and tricks that I've learned along the way to help you get the lowest interest rate possible. I've literally helped hundreds of people, buy and sell properties in the Tuscaloosa area in my career, and unfortunately, sometimes people make big mistakes in the lending process that will end up costing them thousands of dollars over the course of that mortgage. So I'm going to go over some of those things I recommend, some of the ways that lenders try to trick you into going with a certain product, and hopefully this is going to be a huge benefit to you. So let's go ahead and dive on in. But before we get into today's topic 100%, I want to make sure you know about the Tuscaloosa relocation guide that I put together. There's a link down below. If you are considering buying, selling, or investing at all in the Tuscaloosa area, I put together this guide to show you some things like cost of living, the average home prices, insurance, property taxes. And it's pretty clear once you look at the numbers, you can see why so many people are choosing Tuscaloosa over other popular relocation destinations that you might be thinking of. So click the link below. It'll take you to here, put in your information. You'll get a copy of that so that you can check that out. All right, let's go ahead and dive on into today's topic, how to get the lowest interest rate possible. That's actually one of the biggest mistakes, is when people are shopping for mortgage lenders, mortgage brokers, banks, credit unions. Again, there's a lot of different places you can go to get financing for a home. One of the biggest mistakes I've seen people make is just shopping just the rate alone, right? They go here to try to get, see what their rate is. They want to look over here to see what their rate is. And the reason why that's a big mistake is that the lowest rate does not always equal the lowest cost to you. There are a lot of times that I've seen where, a 6.0 interest rate and a 6.25 interest rate, you would think, well, of course, Phil, I'm going to take the 6%. That's not necessarily always the case, right? And the reason why is that lenders, all right, people in the mortgage business, they've still got to make money, right? So they either make their money off of the interest rate and the origination fees that come off of that, or they make it on the closing costs, right? They've got to make their money somehow, some way. So a lot of times what we will see is that lender that just quoted you on the low interest rate is more than likely adding fees into there. And there's some break-even analysis where we can look at that deeper, and we can look at that and see really which is the better product. I know when I refinanced my house several years ago, I went with a slightly higher interest rate because the closing costs were going to be less, and it was going to take like 7 or 8 years for that to break even. Like I would have had to pay more closing cost on closing day if I went with the lower interest rate, and it would have taken me 7 or 8 years of making payments at the higher rate before it would have equaled itself out. So that's something I want you to know that they do, right? A lot of people don't really understand how that works. And so all they do is look at just the interest rate. Okay. I think what you're really looking for, though, overall is like, what's the best deal? What's the best deal for you over the long haul? And so I'll tell you a story. A couple months ago, it was getting time for me to upgrade to a newer vehicle, right? I've been driving a truck for a while, loved it, Ford F-150, loved that truck, best truck I've ever bought in my entire life, loved it, but it was starting to get up in miles. So I did my research, and I figured out exactly what I wanted. I was going to go buy another new truck, right? I drive a lot for work. I need something that's dependable. I need something that's under warranty. So I did the research. I went and drove a few of them, and I knew exactly what truck I wanted, what color I wanted, what trim level I wanted. And so I took my current vehicle to 3 different Ford dealerships. I told them what I was looking to do. and each one of them, gave me their best offer. Well, took a couple tries, right? They did the old, let me talk to my manager. They went around the corner and, texted somebody and, got some coffee and came back and told me what the manager, what was willing to offer to me. And at the end of the day, I was left with 3 quotes. All right. They had the price that they were willing to give me for my vehicle. They had the price of the new vehicle. They had their dock fees and their processing fees, their financing charges, all that kind of stuff put into a 1-page document. And what I did was I took my phone out and I took pictures of those 3 offers and I put it into ChatGPT and I let AI analyze for me what was really the best deal. Right? That's really what we're looking for, right? One of them really wanted to emphasize the fact that they don't charge dock fees. We don't have a processing fee over here at this dealership. You're going to see that all the others. You know what? They didn't have a dock processing fee, but they were the worst deal overall. And so interest rates with mortgages is the same way. All right. Don't just shop for the lowest rate. Shop for the best deal overall. And if you need some help with that, my contact info is below. You can always reach out to me. That's the kind of stuff I do for clients and customers all the time. We'll look at it. Use AI to our advantage, right? I'm using AI a lot for daily activities. I've really done a lot of training and learning on it, and it's smarter than I am when it comes to analyzing numbers. So that's a way that we can look at that too. So I'd say problem number 1, don't just look for the lowest rate. Okay, that's problem number 1. Problem number 2, which I want to get to, is you need to get multiple quotes. Right? You have the opportunity during your rate shopping, during your mortgage shopping process, you can have your credit pulled 3 times without it negatively impacting your credit. A lot of people don't know that. So here's what I would recommend doing. Okay. There are online lenders are out there. We've done a lot of business with them in the past. Okay. We've done a lot of business with online lenders in the past. And I will tell you from experience, I used to give this example, and I'll go ahead and give it to you on here for sharing on here. This might not be politically correct, but getting a mortgage from an online lender is kind of like buying a gun or buying tires at Walmart. Right, listen, I love Walmart. I'm a huge fan of Walmart. But if I'm really looking for an expert on a gun, or I'm looking for an expert on tires, no offense, but I'm probably not going there, because there might be somebody in that store who is an expert on tires, right? I mean, I know they have their own training process they go through. I've bought tires from Walmart. I've had tires installed. I've had oil changes there. But you run the risk of that particular day not getting the best person, right? You might get the person who just knows how to run the register, but they're not really the tire expert. They kind of work in that section a little bit, but they also might float around. And again, when you're dealing with online lenders, you're kind of dealing with that. Right? They hire a ton of people, and a lot of people don't make it. All right. They all have to have a license up to a certain point, but they may not have the experience to really guide you through the process. So here's what I would recommend doing. I would go to one of the online lenders first and get a quote from them. Go to Rocket Mortgage. If you're a veteran like I am, go to Veterans United. Go to Wells Fargo, Lending Tree, Chase Mortgage. Go to one of the big ones first. See what they're willing to offer you. What I have found in the past is that these online lenders, again, they're in the business to make a sale. So they are usually very attentive to you up front when you're shopping around. They answer your call. They call you right back. They tell you what you want to hear. And unfortunately, what I have seen too many times is that we are scheduled to close on Friday. You've got movers coming. You've got a U-Haul truck rented. You've taken the day off. You know, you've got friends and family coming to help you move on Friday, and we get to Tuesday or Wednesday, and now the online lender who has said everything's good to go up until this point, all of a sudden has a problem. And now we're not going to close on Friday. They usually do close, but from my experience, it's usually 7 to 10 to 14 days after they said they're going to. And so, you know, when I'm a local, you know, being a local realtor, if I've got a listing on the market and somebody brings an offer to that and they're dealing with one of those online companies, we kind of look at that a little bit different because we know, like, this is probably not going to be very smooth. Now, us as real estate professionals, we don't get any compensation at all from lenders. It's actually against the law for them to give us a referral fee or a kickback or anything like that. I think they can spend like $25. I think they can take us out to lunch. They can get us a $25 gift card to Academy or Amazon or something like that. We don't get any kind of referral fee or kickback fee from them. But what I want to have happen for my clients is for them to get what they were told they were going to get. So what I have seen a lot is the online lenders are very attentive to you up front. They sound very good. They're very customer oriented up front, but they're sloppy when it comes to actually doing the loan. They say what they need to say to get your business. They give you the rate that you want. They beat everybody else up on the rate. They're hoping you don't look at the fees and the total cost of the loan. They get you under contract. They get the process started, and then they've got you. Okay. So what I would recommend doing is getting a quote from one of those online lenders first, and then reach out to me and let me get you in touch with some local people who really know what they're doing, who are truly experts, who will more than likely match or beat that best rate that you got from your online lender. Okay. We're kind of playing the game here, right? Local lenders, right? They depend on us as real estate professionals to give them business, right? If I'm dealing with one of my local lenders and they mess things up and we were going to close on Friday, but now we can't, he's going to have to see me at local realtor functions. He's going to see me at the grocery store. He's going to see me at Walmart. He's going to see me at Alabama football game, right? And there's a really good chance that if that happens, that person is not going to get any business from me ever again. That's how serious we take it. It's not a good day when we have to call somebody and say, hey, we were supposed to close Friday, but now we're not. All right. So these local lenders that we work with that live and work in our local community, they understand that online lender you're dealing with, if he or she messes it up, I'm probably never going to do another transaction with them ever again. And so they don't care about making sure that we're going to have a good experience. All right. So it's hit or miss. I've had some great experiences with some of those big online lenders, but I've had a lot more bad ones than I have had good ones. So shop around, make them compete against each other. You know, when I knew what truck I wanted, I knew exactly what color, what trim level, what options I wanted. And I went to 3 dealerships that could all sell me the same thing, and I made them compete against each other. Okay. And I got I think a very good deal by doing that. Let's do the same thing for you when it comes to shopping around for mortgages. Okay. Let's make them compete against each other. Competition's good. Again, I mentioned this already. You got to look at the total, your true cost. Don't just make the mistake that most people do. They're hoping that you just look at the interest rate and just shop off of that. That's what uninformed people do. But now that you've watched this video, you're not uninformed anymore. You now know that that's how the game is played. So let's look at that. Let's not let them win by, you know, the Ford dealership that didn't do the doc fee, right? They didn't do the doc fee, but their other fees were way higher. Let's not go into this process uninformed. Let's understand we're shopping the total true cost of the mortgage, right? Okay. I want to mention one more thing. This creates a lot of confusion for a lot of people. The last couple years with interest rates being higher, we have seen the rate buy down come back. And we're seeing a lot of people offering 2-1 buy downs. And I want to just cover this really quickly. This is a very, very important tool. It can literally save you, from the numbers I ran, this could literally save you $30,000, $40,000, $50,000 for your first 2 or 3 years. What a rate buy down is they're giving you a 30-year fixed rate mortgage. Let's just say rates are coming down right now, but last year it wasn't uncommon to see a 7% rate. So let's say that you have your credit pulled, they run your numbers, and they say you qualify for a 30-year mortgage at 7%. All right. What a 2-1 rate buy down would do was it would buy your rate down 2% for year 1, 1% for year 2, and then year 3 through 30, it would be at the 7%. So year 1, your monthly payments would be at 5% instead of 7%. That's a pretty substantial savings for the first year. Year 2, it would go up to 6%, right, which is still 1% below what you're truly approved for. You were approved in the scenario I gave. You were approved for 30 years at 7%. So year 1, you're at 5%. Year 2, you're at 6%. Year 3 through year 30, you're at the 7%. Now, why would people do that? Well, number one, you save a ton of money. And the big reason why a lot of people have done that is that if you do that and rates change in those first 2 or 3 years, you can always refinance back down. So let's say interest rates were at 7%. Today, they're hovering around 6%. And let's say you bought a house last year and you've been paying, 5%. Your payment's been at 5% interest for year 1. Now in year 2, it's going back up to 6. And you know that a year from now, it's going to go back up to the 7% for the rest of the life of the mortgage from year 3 to year 30. But today rates are at 6%. You might say, hey, let's go ahead and refinance and let's lock in a permanent 30-year at 6% instead of the 7% I was approved for last year. Okay, so we're seeing this is a big thing right now in new construction. It's one of the reasons why new construction is the most popular segment right now in real estate, is because the builders understand that this is a way for them to win. You're getting a brand new house and you're getting it at a 2% lower rate for year 1. It's really hard to beat that. All right, we've got people right now that are buying brand new houses and their interest rate for year 1 is in the 4s. All right, we know it's not going to be that way forever, but if it's that way for year 1 and it's a little bit higher for year 2, but maybe we're going to watch and see what happens to rates. Worst case scenario, you just stay where you're at from year 3 to year 30. But if rates do change in the first year, the first 2 years, the first 3 years, you're still getting a lower house payment for the first year, the second year, and then from year 3 to year 30, you've got a decision to make about, do you want to stay at that rate or do you want to refinance down if rates have come down? So a 2-1 rate buy down is a great idea. Unfortunately, for the most part, the only people that are really offering that right now, unless it's a house that's just been sitting on the market forever, has been new construction. And it's actually kind of become standard now that most builders are offering a rate buy down of some sort. And we'll be glad to talk with you more about what those options are. And some builders are offering them, some builders aren't. So something good to know about. Again, if you have any questions about anything interest rate related, real estate related, that is my QR code there that will take you to my calendar. The link is also down in the description below. You can literally click on my calendar, find a time that works for you, schedule a phone call or a video chat with me. And when you reach out to me, it's going to be me and you from beginning to end. It's not going to be my assistant. It's not going to be a rookie agent. It'll be me and you going and looking at houses. It'll be me and you writing offers. It'll be me and you going over the home inspection report. It'll be me and you on closing day. I take a lot of pride in working that way with my clients, and we'll be glad to help you with anything that you need, real estate or mortgage related. I'm Phil Duke Jr. with eXp Realty. Thanks for watching this video.